So, John, no question about it. We've been in a very challenging market and economic environment, and it's likely that the economy is going to continue to suffer for a little while, even if the stock market does pick back up. But you are a genius at finding opportunities in a challenging market.
I'm a glass half full kind of guy.
Oh, well, absolutely.
Absolutely.
Yeah. That's the way we take an approach towards all of the stuff we do.
Right. I mean, you want to look at whatever the current situation is and see if there's anything that you should be doing. You know, whether it's your financial portfolio or whether it's your estate planning. Mm-hmm. These are flowing things.
Right.
Most people don't think of their estate planning as being something that flows, that changes, that is relooked at. So often they do something and forget about it.
That's right.
But there are plenty of estate planning opportunities around. Mm-hmm. You know, when you look at them. Right now, we've had some pretty serious downturns in the market. We got assets that are devalued at the moment. Probably will go back up, right? Right now, I visited with a client just the other day, and each year they make annual exclusion gifts to children, grandchildren, things like that. So they're giving up to $15,000 per spouse, so $30,000 for this married couple, to children. Mm-hmm. And they're doing this in large part because they are trying to reduce the value of their estate over time, because although right now they do not have an estate tax problem, you know, we have a $11.5 million estate tax exemption at the moment, mm-hmm. but you know that law is scheduled to expire in 2025.
Right.
When it expires, that $11.5 million goes back to $5 million. And depending on who wins the next election or the election after that, it could go down even further. And these folks would have an estate tax situation then. So they're actively gifting assets, right? If I have $15,000 worth of stock in February, it's not worth $15,000 today.
No.
It's worth less than that.
Absolutely.
Which means I could actually make a larger gift of these assets for the same $15,000, mm-hmm. right? So where this couple, normally they just get to the end of the year, and right before the end of the year, they write some cash checks, you know, for these gifts. It might actually make sense for them to call their financial advisor or somebody like that and say, hey, why don't we do $15,000 per person worth of some of our portfolio assets that are currently undervalued, because these are going to go back up.
Yeah.
But right now they've got a unique opportunity to give away what is actually probably $20,000 worth of assets for $15,000 effectively, right?
That makes a lot of sense.
Yeah. So if you're one of these people that are participating in annual gifting like that as a strategy, either for estate tax purposes, or maybe you're just generous. Maybe there's some other reason that you're trying to get rid of assets out of your name and into the next generation. You kind of got a unique opportunity when everything is worth less than what it was a month ago. Mm-hmm. You can give away more. That being said, don't give away losses. So if I have that stock that I paid $100 for, and yeah, it went up a little bit, but right now it's worth $75. So I've got a $25,000 loss. If I sold it, I could take that loss against my other income, right? Either against my other capital gain. If I give that property to my kid and my kid sells it, they take it at the fair market value on the date of the gift. Yeah. So their basis in that stock is $75,000 because that's what it's worth today. So if I'm going to be gifting assets, I don't want to gift any that have a built-in loss. I want to gift some that have a reduced value, but still some gain in there.
Yeah. That makes sense.
Makes sense. So you just have to kind of pay attention to it a little bit.
Right.
We also, the other thing that we have, along with everything else, is interest rates are in the tank.
Yes, they are.
They're very, very low at the moment. And again, if you're the kind of person that's concerned about the future estate tax, so whether that, if you would be impacted at that $3.5 million and you're thinking that that's a real possibility down the road, or if you would be impacted at the $5 million, which is already set to be the law in 2025. And for certain, if you're that person that's already sitting there in the $11.5 million or more range and currently have an estate tax potential problem, right? Again, we have assets that are very low. Let's say that I create a trust. Now, this trust will not, anything that's in this trust will not be included in my taxable estate when I die. Okay?
Okay.
But I can't, again, I've got this $15,000 limit, so I can't just go and take all $5 million of my assets and throw them into this trust.
Right.
That would be a gift. I can't do that. It's over the $15,000. So actually, the way I'm going to set this up is I'm going to put these assets into this trust, but I'm going to sell them to the trust in exchange for an installment note at the IRS minimum interest rate, which right now is so close to zero that it doesn't matter. Right? So what I've done now, I'm going to, this trust is going to have to buy these assets, but they're going to buy them at today's reduced value.
Right.
All right. Meanwhile, the assets that are in the trust, which are not going to be included in my estate for my estate tax purposes, what are they going to do, Devin? They're going up.
Mm-hmm. Yeah.
Over the next months, years, the value of that trust, I may sell $5 million to that trust today. And basically, I'm going to get back $5 million over time with this installment sale, right?
Right.
But the $5 million that I put in that trust, which was currently already worth 30% less than it was a month ago. And over the next 5 years, 10 years, there may be $10 million sitting in that trust at the time of my death, which is all going to pass to my kids free of the estate tax.
Yep, outside of the estate, right?
That's right. And I did it without a significant impact to me from the sale, because basically I'm selling it in a zero interest rate environment.
Yeah.
Or as close to a zero rate interest environment as there is.
That's pretty neat. That's a pretty good tool, one that I haven't heard of before.
Yeah. And one last one. Devin, do you advise many of your clients to trade on margin?
No.
No?
I don't.
Why not?
It's too complicated.
And probably a little risky.
Yeah.
Right?
Well, yeah. I mean, and I guess that's what I mean by complicated. It's
right.
too complex.
But I mean, generally the idea is I go out and get a loan.
Right.
I use that loan to buy assets that I think are going to go up.
That's right. And then you have an event happen like we've had happen just recently.
And then later
you have this margin call.
Right. Yeah. But the idea would be that the money goes up in value and then I sell them, pay off the loan.
Right.
Okay. Yeah. But you're often doing that through a bank or something like that. Once again, we have these kind of historically low interest rates and everything. What about an interfamily loan?
Nope.
Let's say that I'm kind of thinking about maybe shifting some assets to the kids or something like that. So essentially, what would kind of be like trading on margin, I sell my portfolio or some portion of my portfolio to the child, again, at today's basically zero interest rate, with the idea being that I'm selling them these assets that are undervalued by 30%. They're going to be able to hold them, and when they appreciate at some point, because they're going to go back up, they can then turn around, sell them, pay the loan back.
How would you go about structuring that?
Just like you would any other installment sale between two unrelated parties.
Wow. So you're buying an asset for a certain price.
Yeah, but you're buying it at today's undervalued price. My kids are basically buying this portfolio from me at today's undervalued price. The market goes back up, they sell, I get paid back, but I was able to get a big chunk of my assets out of my name, because all of the appreciation is theirs. That's their appreciation.
Yeah.
I just had a client that came in the other day, and he was saying, "Hey, John, I'm thinking about giving my child $100,000 so that they can buy a house." This may be hey, why don't we transfer them? Why don't we maybe sell them some of your undervalued stock right now for $100,000? Let's hold this for a month or two. Let it come back up. They can sell that. They keep the appreciation, so they've got the money. And anyway, there's just some different ways that you could structure all of that.
Yeah, all of that sounds complicated as well. So anytime we're dealing with agreements, contracts, doing this type of stuff, this is not something you want to scribble out on the back of a napkin, is it?
No. And there's different ways you can structure this depending on the payment portions. There is no such thing as a zero interest loan. Mm-hmm. That's why I keep saying the close to zero. Yeah. You still have to deal with the IRS minimums, and there's a number of other estate planning factors that you need to factor into all of this. And what happens if you die during the term of the note, and some other factors as well.
So this is some planning that really only needs to be executed with an attorney.
Absolutely. So once again, and I know we say this all the time, but this is one of those things where you should be routinely checking back in with your estate planning attorney, mm-hmm. saying, "Hey, look back at my stuff. Is there anything that I should consider doing?" Just this morning, I had redone some clients' estate planning based on the passage of the Secure Act. Laws change. Their stuff needed to be updated. They sharp enough to call me and say, "Hey, John, we heard about this Secure Act thing. Is there anything we need to change?" Sure enough, there was. So when you're, engaging that estate planning attorney, they're going to be able to recognize these planning opportunities and suggest them, and then getting with your financial advisor, getting with your tax advisor, you're going to be able to come up with some plans and some strategies.
Yeah. Well, as in some of the other stuff we've talked about on this channel so far, there's a lot of opportunity that these difficult times bring us, right?
That's right.
And this is just yet another example.
There you go.